Okay, next up is moving averages. I'll just do this on the interactive brokers because this is the same on every platform pretty much. So simple moving average. That's taking the average of X previous candles. So for example, if I say 20, that will be the simple average. Sorry, just the average of the previous 20 days. And since there are 5 trading days in an average week, this is more or less the monthly moving average price. And these can be used, for example, in the way that when the Apple stock here, or whatever stock we're watching it, is above the monthly moving average line, we can think that it's in a short-term bullish trend, so short-term uptrend. So here it moved up, it pulled back to the level, but it continued higher, and somewhere here could have been a fine time to maybe buy Apple because it did not fall below it. It tried, but it didn't. And that would have been a nice trade. There was a short time when Apple was in a short-term bearish trend, and then it became bullish again. Quite a lot higher, and then some consolidation, bouncing back higher from the 20-day period, 20-day simple moving average, and bounced higher, and then now it's again it has closed below. This, by the way, these are weekly candles. So that little drop was the COVID. This here was the 2018, that was a longer drop. Checking maybe daily here. So you see 20 weeks is a totally different thing than 20 days. 20 weeks is more or less half a year already. So on the daily chart, Apple has been in a short-term bearish trend for a longer time already. There it has been jumping up and down in here, and then it took a short time from the end of November to the end of December. It was climbing higher, then it didn't know what to do, jumped higher, didn't know what to do, and started falling. So this is how they can be used. A lot of people watch the 20-day, 50-day, 100-day, and 200-day simple moving averages. There are also other types of moving averages. Maybe I'll show that on a different platform, for example on Tasty. Exponential moving what? Oh, that's funny. How do I find exponential moving average? Moo. No. EMA. Okay, now I need to write EMA. So it's like exponential moving average is slightly different from the simple, in the way that it is slightly more what is it called? It reacts a bit faster to the changes. So there is a little bit more weight in how the average is calculated on the most recent values and slightly less weight on the oldest values. So, and then there are like, we can use different numbers. 21 is something I like to use for the exponential ones. I'll change the color so that I can see it. Let's say yellow. So here, Snapchat on the daily has been using this 21 period moving average pretty much like support, except that here it didn't know what to do for this time here. This was probably the time when the DMA indicator mentioned in an earlier lesson was directionless, and there it picked a direction again, and that's higher. So exponential moving averages, simple moving averages, they're just basically lines on the chart that are automatically calculated from price, and they tend to follow the price. I'll do the last thing still on toss, so simple moving average. A lot of longer term investors and traders use a 200 period simple moving average as a kind of indicator to the longer term trend. So here Pinterest was not something interesting to buy because it was under the 200 period simple, so that's more or less 1 year. And from here onward it has been interesting, so well, it has climbed a lot higher than the simple moving average. For if I check SPY, so that's the S&P 500 tracking ETF, here at this point in 2020 the price fell below the 200 period simple moving average. It tried to bounce back and then it really fell deep when finally that broke. So tried to bounce back higher and then there we go. When it started climbing above, it had trouble breaking above the 200 period simple moving average level. When it finally did, it kind of kept going. Of course, one could say that there was some sort of resistance point here, and when that was broken, it just kept going. But the fact is that a lot of people like to watch the 200 period simple moving average, so that may be worth paying attention to. Now, just for fun, I have no idea how this goes, but if I put simple moving average, simple moving average 150 on the chart, I don't know how this is going to look because I haven't checked this before. I'm just shooting the video. Let's say that is that kind of magenta color, and this 50 I will make green. So these are quite widely used. There was no moving average here. I was kind of curious about seeing if that was some of these slower standardly used. I'll still at the 20 to see if it was that or if it's nothing from these. So the last one was 20 and that's the fastest, and now I need to use some different color again, white. Alright, well, it had some trouble breaking above the 20 period simple moving average. Both it crashed against it, fell back and then broke above. Then there was a little bit of, we can imagine that there was maybe a little bit of resistance here, maybe not. The 100 and 200 lines were pretty much in the same area, and there it bounced from these moving averages. There it bounced back up from the 50, bounced back up from the 100, fell slightly below the 100, bounced back higher. There it bounced up from the 50, and now S&P 500 is at the 50 period simple moving average. I have no idea where it's going next week, but previous time it did bounce up from here, so who knows, maybe it does that again, or maybe it needs to go down and say hello to the magenta line or the violet line at 365 or so. So anyway, these are moving averages, and people kind of use them to figure out some trends. For example, here, this is, by the way, this is stacked positive situation. 20 is above 50, is above 100, is above 200. Here, the 20 is below 50, so that's not so clearly bullish anymore. But since 200, 150 are in the correct order, it's still like quite a bullish chart. Here everything starts to be mixed somewhere here. So that becomes a really not bullish looking chart at all. 2018 was this one. That's the previous bigger drop. So that as the 20 line starts and the price also falls through these levels, that kind of messes up the chart in a way. It's up to here. There was a bigger drop also in the beginning of the year. But all of this time, since they're very neatly ordered, there's no reason at all to be a bear. at least if you're trading just the price. But once things start going like this, then trading downwards becomes maybe a good idea. There was a really, really long time when everything was just very orderly. Just basically buy S&P 500 every time it makes a little dip towards the 50 period. Buy 50 here, buy 50 here, buy 50 here, buy 50 here, 100 here, buy here. It would have been very, very, very easy time to just buy it basically every time it falls a bit deeper. Here the same thing after the COVID drop. Every drop it makes finally bounces back higher. Who knows, maybe the drop here becomes something like this or something like 2008. Maybe it does not. There's no way to know this. But if the price starts falling through the 50 level, that is a warning signal. So well, these are good for warning signals at least. And also moving averages give quite good entry spot IDs. They don't hold perfectly each time, but this was close enough. This was really, really close. That was almost perfect. Almost perfect here. There is something about these moving averages, so it makes sense to pay attention to them.